In 2024, the global API management market hit $5.5 billion, growing 25% year over year per Gartner, as businesses from London to Lagos leverage APIs to expand. Welcome to the Deep Dive. I'm John.
And I'm Wendy. We're both part of the WeWire team that puts together the StayWired weekly recap, that comprehensive look at the week's market movers, active stocks, FX, and commodities.
Exactly. And while that report is packed with data across those areas, today we're pulling out a key trend highlighted in the report, one that's fundamentally changing the nature of competition itself, often in ways, well, you might not even see coming.
It's a truly fascinating section from the report, isn't it? Titled, "Your Next Competitor Might Not Be a Country, It Might Be an API." And this is just incredibly relevant for you listening, because whether you're leading a team, running your own business, or just trying to understand global markets, this trend directly impacts the business world you navigate every single day.
So let's get right into the core idea from the source material. The traditional view of competition often revolved around geography, countries versus countries, companies within borders, maybe expanding over years.
Right, the old models.
But the report makes a compelling case that digital platforms, powered by something called APIs, are just dissolving those geographic barriers, like really fast. They're redefining who your competitors are and where they can come from.
It's almost like the digital world is building these new trade routes, ones that completely bypass the old physical highways and border checkpoints, and the invisible infrastructure making this possible, APIs.
Right, application programming interfaces. Can you maybe break that down a bit? What are they, essentially?
Well, think of them as digital connectors, standardized ways for different software systems to talk to each other, to share data, or provide services. It all happens seamlessly, efficiently, behind the scenes mostly.
They really are the invisible engines driving so much online, and the scale. It's already huge and growing incredibly fast. We mentioned that $5.5 billion market size from Gartner.
And that 25% year-over-year growth.
Exactly. That isn't just some abstract number. That growth signifies a really fundamental shift in how businesses are choosing to expand and operate globally. They're putting serious money into making their capabilities available via APIs, or using API services to reach customers they just couldn't before.
Precisely. And this is how APIs fundamentally erode that old geographical advantage. Traditionally, setting up shop in a new country meant huge logistical hurdles: legal, regulatory, infrastructure, staffing.
A massive undertaking.
Totally. But APIs allow businesses to offer services or integrate capabilities globally without needing that massive physical footprint. It enables scalable, instantaneous reach.
Okay, let's make that concrete. The source used Stripe as an example. They do payment processing, right? But instead of building payment infrastructure country by country, the slow way, they built a powerful API. And according to their own 2024 report, that API now powers something like 1.5 million businesses across 195 countries.
Wow, 1.5 million. Think about what that means. A small online retailer, maybe in Kenya, using Stripe's API, can accept payments from customers anywhere in the world with pretty much the same ease and security as a massive retail giant in the US. They don't need complex international banking setups or different gateway regulations country by country. The API just handles that complexity.
So competition isn't just about where your headquarters are anymore or how many physical branches you have. It's increasingly about how effectively you connect your services digitally.
It shifts the focus dramatically. Suddenly, that competitor across the ocean isn't facing these insurmountable geographic hurdles. They might just be a few API integrations away from reaching your customer base. Competition becomes, well, a battle of digital agility and code, not just physical presence.
This brings up a really interesting comparison from the report. How does this API-driven world stack up against the traditional ways we've tried to open markets, trade agreements and the like?
Oh, it's a powerful contrast. The source material really highlights the difference in speed and scale. Think about something like the USMCA agreement, the US-Mexico-Canada deal. Important, yes, but it took years of incredibly complex negotiations. Governments, tariffs, regulations.
Years of discussion, drafts, political wrangling, just to adjust the framework for physical trade.
Exactly. Now, contrast that whole process with a platform like Shopify. Shopify is essentially an e-commerce platform built on this huge ecosystem of APIs, right? It lets merchants easily integrate everything, payments like Stripe, shipping, marketing tools, you name it.
Oh, yeah.
According to Shopify's 2024 data referenced in the source, this platform helped 2 million merchants around the world generate a staggering $600 billion in global sales.
$600 billion, enabled not by a government treaty taking years, but by a digital platform built on these open connections. The difference in, velocity is just astonishing.
It absolutely is. And the source gives a great little example of how this helps small businesses. Imagine a small craft business in Vietnam. Traditionally, selling to a customer in the U.S., that means complex export rules, customs, international shipping logistics, calculating taxes.
Sounds as a nightmare for a small operator. Massive red tape.
Right. But through a platform like Shopify, powered by APIs for things like shipping integration, which calculates costs, prints labels across borders, and payment processing, handling currency conversion, maybe even some tax stuff, that Vietnamese business can sell directly to a U.S. consumer with minimal friction. The APIs handle so much of that cross-border complexity.
So these digital connections, they're not just facilitating trade, they're actively automating and simplifying the really hard parts that used to need experts or government help.
And you see the impact in the global trade data. The WTO noted digital trade grew 30% faster than physical goods trade from 2020 to 2024. The source explicitly links this faster growth to the spread of these API-driven ecosystems. APIs are just outpacing the traditional ways of opening markets.
Okay, so APIs dissolve borders, speed up trade, simplify things. That sounds like a potent recipe for a competitive edge. What specifically lets these API-driven firms move so much faster or get so big?
Well, the core advantage is really the ability to scale and innovate incredibly quickly, often with lower upfront capital investment compared to traditional models, because you're building on existing services provided by others through APIs like cloud storage, payments, identity checks, AI models.
Rather than build it all yourself from scratch.
Exactly. The source uses Amazon's AWS APIs as a key example of this infrastructure advantage. Developers anywhere can tap into computing services, storage, databases, whatever, just by calling AWS APIs. They can launch apps globally without setting up their own server farms everywhere. AWS serves developers in 190 countries, and its revenue from these services hit, $100 billion in 2024?
$100 billion. That scale, available on demand through an API, it just changes the game completely.
It does. If you're a traditional company needing physical infrastructure or complex supply chains in every new country, you face big delays and costs. But an API-integrated firm can basically plug into existing digital infrastructure that's already global. McKinsey estimates, and the source cites this, that firms using APIs well can cut their go-to-market times by 40%.
40% faster to launch.
Yeah.
Just by using digital connections. That's not just efficiency, that's like a strategic weapon in today's market.
It lets companies react faster, deploy new features, enter new regions, at a pace traditional businesses often struggle with. Another really powerful example from the source is India's Unified Payments Interface, UPI.
Ah, yes, UPI.
It's this API-based system connecting different banks and payment apps instantly. It processed an incredible $2.4 trillion in transactions in 2024.
Trillions. Processed through APIs, kind of bypassing the old banking rails.
Pretty much.
Yeah.
And this API infrastructure allowed agile fintech companies like PhonePe to emerge and compete directly with huge established global banks, even though PhonePe didn't have a single physical branch. Their whole operation, connecting to accounts, processing transactions, it's all built on UPI APIs.
No branches, but trillions in transactions and competing head-on with the big banks. That really drives home the point about scale and disruption through these digital connections.
And what's really crucial to get is that this transformation isn't just in e-commerce or finance. The source material makes it clear. API-driven competition is hitting industries right across the board.
Okay, let's widen the lens then.
Yeah.
Beyond platforms, how else is this showing up? This source mentioned retail, using Shein as an example.
Yeah, Shein. Their model relies heavily on APIs to optimize that incredibly complex, fast-moving supply chain. By integrating with manufacturers, logistics firms, maybe even trend data sources via APIs, they can react super fast to demand and streamline everything. The source mentions reports that this helps them cut delivery times by 50%.
Cutting delivery time in half. That's a massive edge, especially in fast fashion.
It is. And according to 2024 Statista data cited in the source, this operational efficiency, really powered by API integration, helped Shein capture a huge 20% of the entire U.S. fast fashion market. That market share is directly linked to their speed, enabled by their tech stack.
20% of a huge market gained through optimizing digital connections.
Okay, what about finance beyond just payments? Plaid was mentioned.
Plaid's a perfect example in broader finance. Their APIs are like a bridge, connecting over 7,000 different financial apps, budgeting tools, investment platforms, lenders directly to users' bank accounts. This lets fintechs offer cool new services using financial data or initiating payments without building connections to thousands of banks themselves.
So the fintechs aren't rebuilding banking, they're using Plaid's APIs to connect to our existing bank accounts. Exactly. They leverage the existing financial rails via APIs to innovate quickly on top. The source notes Plaid facilitates connections to over $1.2 trillion in linked assets through its platform. This whole ecosystem of API-connected apps is a direct challenge to traditional banks.
And the source makes the point, this isn't just tech-native sectors like e-commerce or fintech, it's even reaching places like healthcare.
Yes, Google's Health API gets a mention. According to Google Cloud data, this API is powering over 500,000 telehealth sessions every month.
500,000 telehealth sessions a month, enabled by an API.
Precisely. This lets patients and providers connect virtually, potentially bypassing traditional regional providers or needing fewer physical clinics for some appointments. The main takeaway across all these examples, retail, finance, healthcare, is that when APIs erase geography, cut the need for heavy physical infrastructure, and speed up operations, no sector is really immune from this new kind of agile competition.
Okay, let's try and wrap this up. The source material paints a really clear picture. APIs are these powerful, often unseen digital engines. They're dissolving geographic boundaries, accelerating digital trade way faster than physical goods, and letting companies of all sizes scale and innovate at speeds we haven't seen before. And this is allowing agile newcomers to challenge established giants across all sorts of industries, really reshaping the competitive landscape.
That's right. The core message from the source feels incredibly relevant, almost urgent. Your next competitor might not be who you think, not a company your size, not structured like you, maybe not even based where you expect. It could easily be an agile startup halfway across the world that's just better and faster at using APIs to reach customers and deliver services.
We've seen the scale, that $5.5 billion API market, slashing entry barriers globally, driving digital trade past physical goods. It's undeniably a major shift happening right now.
It is. Now, while the source focuses on the transformation and benefits, it does briefly touch on the challenges too, which are important. Things like cybersecurity get more complex with all these interconnections. Privacy concerns grow with potentially vast data flows. And there are big questions about access, making sure everyone benefits, not just those with the tech skills.
Absolutely. Those are real issues to navigate.
Yeah, they require vigilance as this all evolves. But the overall trend and the prediction for the future the source highlights, it's pretty compelling. The future of competition seems increasingly tied to really understanding and harnessing API power.
Which leaves us with that really provocative final thought from the material. The source referenced a BCG report prediction for 2030. What was that again?
That prediction, as cited, anticipates that API-driven firms could capture as much as 30% of global trade value by 2030.
30%. Captured by companies leveraging code and connections, not just physical assets.
That's a powerful signal, isn't it? A world where code, agility, connectivity, not borders or traditional scale, increasingly define the winners. What does that mean for your specific industry, your company, or even your own strategy moving forward?
This has been a deep dive based on content from the StayWired report. We definitely encourage you to think about the profound implications of this API-driven shift in global competition for your own context.
StayWired Weekly Recap was produced by WeWire,
a B2B company, bridging the banking gap between emerging markets and the world.
Tune in same time next week for the StayWired Weekly Recap.